A lot of this stuff on the trade policy, it just seems like theater.
The market is a very strange place these days. You may or may not agree with me. Look what happened in the second quarter. Big fall off, record highs at the end. The market's going to new highs. Margin is at I mean, there's just all of this list of things that are going on, and all of it seems to be disregarding economic policy and tariffs from the current administration. How do you reconcile that, Joe?
Well, I think there's two things going on here. And I think the main one, when we talk about all the speculation going on, because there's a ton of speculation out there, let's be honest. And this is all at the retail level. If you look at institutional level, institutions are not that bullish. They're just not. They're kind of neutral to maybe on the bullish side a little bit, but they're not in general. We're talking pension funds and hedge funds, well, they're not really bullish. But retail is bullish. Just, oh my God, they're buying anything. Meme stocks, you've got, you get stocks like Kohl's, which is Kohl's is a department store. It's got some problems. They don't have a lot of debt or anything. It's not like they're going to go bankrupt, but there's no there. It's a terrible store. There's a reason why the stock's down. And some of the other things, I don't remember all these stocks that they're trading these days as meme stocks, but whatever. That they just don't really have. There's no there. So people are buying these things because they've got high short interest. And this whole thing goes back to the meme stock on Reddit or on Reddit, where they would find these stocks with a high short interest and they would get together and push the stocks up and force the shorts to cover, which by the way, once upon a time, that was illegal. Well, for some reason, it's not illegal anymore to collude and manipulate a stock. It used to be, but for whatever reason, we've decided that as long as it happens in a chat room, it's okay. Yeah, I don't know. I don't really buy it. But anyway, it doesn't matter. That's what people are doing. And they're doing it on margin. They're buying lots of call options. They're betting the market's going to keep going up. Put options are going begging. You can hedge the market pretty cheaply right now. Margin debt, as you mentioned, is an all-time high. And those things are being driven, I think, by this. President Trump has made it very clear that whoever the next Fed chairman is going to cut rates or he ain't going to be there. And so I think people are looking at this and going, well, easy money, man. Easy money's coming because they know they've been taught since 2009 that when the Fed eases, man, stocks go up. And I'm gonna get ahead of it. So I'm gonna buy now. I don't know. He might fire Jerome Powell next week, and then he gets somebody in and starts cutting rates. I need to be ahead of that. So that's what I think. That's what's going on. I think they're speculating because they know that or they think that easy money's coming. As far as the tariffs are concerned, I think there is a belief at the institutional level. I don't think it's so much at the retail level. I think there is a belief at the institutional level, though, that the tariffs are at best temporary, that they're not going to last. And I think there's a very, very good legal argument to get rid of most of them. I don't even, maybe all of them, but at least most of them. And so I think a lot of people are not taking it seriously. And as I said in the piece over the weekend, I think sometimes you hear things come out of these guys, particularly Lutnick. I look at Howard Lutnick and I think, how in the world did you run a brokerage firm, dude? When he comes out and says, oh, Donald Trump can do anything he wants and Japanese will pay for it. Really? What planet do you live on? Because this $550 billion fund they're talking about in this alleged deal with Japan, it's 10% of their GDP. You think the Japan prime minister is going to be able to hand over 10% of GDP to the US president, do whatever the hell he wants with and keep all the profit? Oh, no, excuse me, 90% of the profit? I'm sorry, but he's a politician too. And by the way, his party just lost the upper house. He already lost the lower house. He's a kind of a weird, lame duck, weird guy himself. He has no power. You think he's really going to give Donald Trump $550 billion? It's nuts. So I don't know why anybody would believe that. And I think that kind of goes to the essence of what I'm trying to say here is that a lot of this stuff on the trade policy, it just seems like theater. We don't have any real deals yet. We've made this deal with Japan. We made a deal with the UK. We made a deal with Indonesia, a deal with Vietnam. I don't know how many there are. And not one of them. There is no documentation on any of them. Nothing. We got press releases. We got executive orders that for the UK that says, "Hey, here's the general outline." Some hand waving. Don't look at the details. We got a deal. And I think people look at it and they go, what am I supposed to do with this? You know, I, I really, and honestly, I'm kind of in the same boat. I don't know what to do with it either. I don't know. I kind of believe that from a legal standpoint, I don't see how the tariffs stand, but I don't know how long it's going to take. It could take months, probably could be years even before the Supreme Court finally rules on this stuff. There was a case back in the early 70s when Nixon imposed 10% tariffs. Guys sued, said it was hurting his business and said it was illegal and went all to the Supreme Court. And, a year and a half later, the Supreme Court said, yeah, you're right. It was illegal. Well, by that time, the tariffs were gone and the guy was, I don't think his business was broke and didn't matter. So the justice system maybe may point towards justice, but it doesn't get there quick. So listen, I don't know what to make of all this stuff. I keep looking at the market and I go, you know what? Interest rates haven't changed. We know there's no change in the general outlook for growth or inflation. It changes some, but it's not big movements. The only thing that's really changed is the dollar. And I don't think that's about trade policy. I think that's more about other things. And I don't think it's really about the trade stuff. It's about a whole bunch of things. And so that's all that's changed, really. So out of all this stuff happening, all this talk, all these things, all this every day, they're in front of the cameras talking about something, and I'm not sure it means anything. So uh,
Well,
we'll
Steve,
see. We'll see. That's all I can say.
Joe mentioned theater, and it seems like a lot of this is illusion. And I think there's a part of human nature here that says, "Oh, it's different this time."
Yeah, we've heard that before, for sure. And yeah, people see things as a story, right? I mean, your retail investors not combing through balance sheets and income statements. They're not comparing, forward-looking PEs or they're hearing stories. And you know, back at one point, this market was down about 20%, and the story was pretty negative. Right now, the story is pretty great, and we're doing good. I mean, it's going to change. And another thing I would throw is sometimes this job's just horrible. When the market's down, you're dealing with the market being down. When the market's up, you're looking like what bad stuff is there out there that I need to pay attention to. And right now, there's some worrisome stuff. People, the retail investors, as Joe pointed out, they're too bullish. They're too excited. We're looking in terms of putting margin to work, not just, buying everything you can buy, but then borrowing money to buy more. If you look at the price of downside insurance, nobody's interested in it right now. I mean, there's a lot of different, and I'd encourage folks to kind of take a look at the newsletter if they haven't. Joe hits some of those, but a lot of metrics you look at to kind of gauge where investors, particularly in this case, retail investors, are getting out over their skis. They're getting hit. Now that doesn't mean you short the market. It doesn't mean you go completely to cash, uh, because we're not seeing recession indicators right now. The market tends to go up more than it tends to go down, and these kind of uh, speculative moments can last longer than you think they should. But maybe not a bad time to put a little cash aside, have a little bit to buy, because people are just, as much as they got too worried earlier in the year, they sure look like they're too excited. And I would just throw out another thing that maybe has changed is the amount of speculation, the amount of gambling. If you look at like earlier generations, you'd get something like 1929, it would happen once. Or I'd get like that 73, 74 bear market, and it would kind of like happen once. I mean, we've had 2000, we've had 2008, we've had COVID. People keep coming back for more. They keep wanting to gamble more. There is no learning their lesson for this generation. And I really do think the online gambling, some of the stuff we've really done out of Silicon Valley for tuning people for dopamine addiction, for constantly getting hits, and the attention span for stories where we don't even pay attention to a story for very long before we want a new story. I do think maybe that is one thing that's changed the market. Maybe our appetite for speculation, our appetite to get burned with one story and turn back for another speculative story almost immediately is higher than it's ever been. Maybe that kind of has changed with technology and people. But the way this always ends is the same. You get too excited. You deploy too much margin. You push yields down for the riskiest stuff enough, and equilibriums get reestablished. Stuff and that eventually snaps back. Um, and that will be part of the excitement, I guess, when it does.
Joe, this irrational exuberance is when those of us who are contrarians begin to kind of hold our hands up and start to back away and go the other direction.
Well, yeah, I mean, I don't know, irrational exuberance. Yeah, I suppose. I think some of it is irrational. But look, you know, there's an old saying about the market can stay crazy longer than you can stay liquid. I'm not advocating you run out and short this thing. And I've got some personal experience with that from the dot-com bubble, I can tell you that. I'll never forget trying to short Yahoo into all most of 1999 and losing my butt on it. But I was young then, didn't understand. Anyway, look, I don't know. Steve mentions recession. We're not seeing recession indicators. That's not the only reason why we have bear markets. I was thinking about this over the weekend. I got to write something about it there and go back and get some of the dates. Look, bear markets are not always about recession, and drawdowns in the market are not always about recessions, and they're not even necessarily about economic things sometimes. But I don't see anything right now that screams recession. Now, I will say there are some things that are, worrisome. I'm pointing out Chicago Fed National Activity Index is negative 10 of the last 13 months. Now, a negative number on CFNAI just means you're growing below trend, and trend's about 2% growth. So if we're growing below trend, and that's true 10 of the last 13 months, that's starting to look like a trend in the trend. And it's like, well, what does that mean? Well, Steve and I have talked about this many times. When you're growing at a lower than normal rate, if you're growing below trend, it doesn't take a lot to knock you into recession because you're closer to it. If your trend is 2% and you're growing at 1, well, it doesn't take a lot to get you to 0. And I would say too, by the way, that if these tariffs do stay at these levels, if they really are implemented and stay at these levels for any length of time, I would venture to say you're probably going to get pretty close to 0 or possibly a negative number. I don't think that would be shocking at all, especially when you combine it with with the negativity from immigration. We've talked about that too. Immigration is more about total GDP, whereas productivity growth and other things are what makes up the other part of it. But I just per capita growth is per person. So I'm not saying we're going to have a recession. I'm not saying that that's what I'm looking at. I'm just saying it's uncomfortable to be growing below trend and have things that we know are going to be headwinds. If these things stick, we know that 0 immigration and tariffs are going to be a negative for the economy. We don't know how much. We know too, by the way, that there are some positive things from the budget bill. There were some negative things from the budget bill too. The question is there a positive in the budget bill that is big enough to offset the immigration drag and the tariff drag? I will tell you, I've read a lot of it. It's way too long to read the whole damn thing, by the way. I don't know. How the hell do they pass these things? Nobody knows what's in it. And suddenly, things start happening. They're like, wait, I didn't vote for that. Well, yeah, you did. I've read through bunches of it, and I will tell you, I've kind of highlighted some things and said, well, that's pretty good. There's nothing wrong with that. And I've looked at some other things, and I'm like, well, that just really doesn't move the needle on anything. This whole thing about the tax on tips. I'm sorry, it just costs money and doesn't do any good. It just really doesn't. And especially when your immigration policy suddenly makes Las Vegas a little less populated. They're not getting as many tips. But anyway, that's a whole nother story, I suppose. Look, I don't know how this is going to end. And I think that's kind of where we are. There's so much uncertainty. We just don't know. And that's what we always say is, look, we don't try to predict the future because we don't know what it's going to be. We don't have any way to do that. So what we do is we watch our market indicators. And right now they say there's no change. And so, but from a sentiment standpoint, things are too frothy. We are not anxious to be buying into this market. We're not rushing out to sell a bunch of stuff. But where we see weakness, we have a stock, for instance, that has a bad quarter or whatever. You know what? It's out the door. We're not going to wait on things to get worse. So I think that's kind of a good way to look at it. If you've got things that you think might be problems, yeah, well, you know what? Might be a good time to just ditch them and move on to something else. And the something else might be cash. It's not terrible right now at 4%. I don't know. like I said, we're not anxious to be a buyer here. We're not really overly anxious to be a seller. We're just cautious, and we'll see how it all comes out in the end. I have my thoughts about it, but I have no, I don't, I can't predict it, so I'm not going to try. And I don't know. The thing that bothers me the most is the gambling. And Steve and I have talked about this a bunch of times. Man, the gambling thing to me, this has changed people's psychology in a major way. Sports gambling, all this stuff that's been legalized, I think is really, really bad for the country. And I think it's bad for individuals. It's bad for families. It's bad in a lot of ways. And I think it's infected the market. And I think I don't think that's a positive either. But the Supreme Court ruled it as, that it was okay. And so that's what people are doing. I think we need some new laws. We need to limit this stuff. But I don't get to make those rules. So we'll have to wait till some politician comes along and thinks the same thing.
If you find yourself being emotional about your investing, we'd love to talk to you about a non-emotional approach. Let us know at info@alhambrapartners.com.